Hey, it's John from Financial MD, and welcome to another Didactic Minute. You're probably wondering what I'm doing wearing a suit in what is clearly my home office. Basically, I was in my closet today getting ready, and my wife was wondering the same thing. I looked at my suits and I thought, boy, those poor suits, they seem neglected, haven't been worn in a long time, and I really didn't wear them that often before, but sometimes you got to mix it up, and that's just how we cope. So here we are, still in the quarantine, but still trying to put out some good topics for you. So what are we going to talk about today? And I felt like maybe today's topic does need a suit, because today we're going to talk about the market or the stock market or whatever you want to call it. This is the thing that gets talked about quite a bit in financial news and CNBC, or anytime you hear the market's up, the market's down. Most people who are not financial advisors or stockbrokers or not doing it as some kind of intense hobby or passion really have no idea what that means. And so I'm going to break it down for you in like 60 seconds. What is the market? The market is basically people looking at a few different, what's called an index. Okay, so a company does something called going public. They then offer bits and pieces of their company to the general public to buy. That's called a share. That's a stock. Okay, you've heard of that before. Then the biggest companies, let's say the top 500 companies in the world, go into an index or a list compiled by Standard & Poor's called the S&P 500. So a lot of times to look at a general representation, or you guys remember from statistics, a random sampling, or a big enough sample size to be accurate and reliable, would be the S&P 500. It's the 500 strongest, largest companies that are publicly traded in the United States. You might also hear about the Dow Jones Industrial Average. That is roughly 30, give or take, of, again, the top companies in the world. So when they want to see how the market's doing, instead of tracking every single publicly traded company, they'll just look at those, and those numbers, it has a price, it's an average weighted price of all those companies. It will take that number, and when you see it go up and go down, for example, in March, the Dow, the S&P 500, the stock market dropped somewhere between 20-25% or more, depending on which numbers you look at. So that's what people are talking about. And which leads me to my next topic, and we may go more in depth on this at another time. That's where you get this topic of index funds. So if you go to Vanguard and you buy an index fund in your Roth IRA or in your 401k, you get an S&P 500 index fund. It's basically a mutual fund that just tracks the performance of the S&P 500. It's not buying a particular stock. It's not getting real strategic in what companies it buys. It just says, we're going to take our investors' money. If the S&P 500 goes up, their money goes up. If the S&P 500 goes down, their money goes down. And that's how it works. So that's what the stock market is. It's obviously much more complicated than that, but that's the gist of it. So when I look and see what the stock market is doing on a particular day, I will pull up my phone and I'll go to the stocks app on my iPhone and I'll look at the S&P 500's price that day. Or I'll look at the Dow Jones price that day. And it's set at a certain thing and it goes up and down. So hopefully that helps you to sound a little bit more educated at a party. Hopefully you trust in what I'm saying because I'm wearing a suit. But seriously, there's a lot more great details if you go to Investopedia. You can go to Investment News. All sorts of resources out there. The Motley Fool, Forbes, CNBC. Take a look at some of these articles, just general market news, or even if you have an iPhone, go to the stocks app. They should already be built in with the Dow Jones and the S&P 500. Swipe over or swipe up, and you'll see news about the particular stock market as a whole. And again, that's just a basic read of how the economy's doing. So hope that helps a little bit. This is John from Financial MD with our Didactic Minute. We'll see you next time.